Alright, good morning then everyone as we head into European trade on Tuesday the 31st of October. Last day of October at the moment. I'm going to say at the moment, last day of October today, head towards the second last month of the year. But a couple of things to note before we get stuck into some charts. Stocks in Asia slide on weak Chinese data, which we'll have a look once we get around to the calendar at the minute. Say stocks in Asia slide. Stocks largely positive yesterday. The Nasdaq and the Russell didn't manage to notch gains like the S&P, and certainly the Dow Jones was aggressively moving higher. Moves driven by sort of somewhat of a realization. You'd have to imagine that earnings weren't actually that bad. Earnings were positive, relatively positive for the majority of mega cap stocks. Mega cap stocks largely take up the Dow Jones. Dow Jones rallying aggressively in yesterday's session, likely to prove somewhat supportive for stocks. And in the short term, we've obviously got the Fed tomorrow, which are probably likely to reiterate their hawkish stance, continue with the higher for longer narrative, and as long as, certainly from the US dollar's perspective, as long as US data that we get over the calendar, as long as that remains positive, you have to imagine that currencies across the board will struggle to notch any meaningful upside against the US dollar. Then the Japanese yen. The Japanese yen maybe somewhat of a surprising move overnight. Japanese yen is lower across the board post BOJ. You can see here yen slides as BOJ's piecemeal policy tweak underwhelms. Markets had expected, and me along with that, had expected some sort of a move towards the end of negative interest rates. Obviously not in the form of hiking interest rates, but something along the lines of tightening monetary policy. And they seemingly have removed the upper band of their 10-year yield range of they said it was loosely at 1%, but they've removed the statement that they are prepared to purchase unlimited bonds in order to keep yields below 1%, which is kind of a bit of a de facto removal of the 1% upper band. Movements in markets this morning kind of look like that was priced in. Markets somewhat don't really care, but it's probably a smart move for them. They kind of maybe allow yield curve control to just take a back seat and ride off into the sunset without ever coming out and formally removing it, which would probably cause some volatility in the Bank of Japan. So overall, I think this morning's move was probably positive for the Japanese yen. I know that hasn't been realized yet in markets, but if the 10-year yield starts to push higher in Japan and starts to catch up, albeit it's not going to catch up to any of the other kind of major economies' bond yields, but if it does kind of close that gap, likely to be supportive for the Japanese yen across the board. So maybe not moves we've seen just yet, but ultimately I think long Japanese yen, certainly from a bit more of a medium-term perspective, probably isn't the worst idea in the world. Now, apart from that, that's kind of where we're at in terms of markets today. We've got a busy economic calendar in Europe to start the week, and then over to the US as we come into tomorrow and into Friday, which we will obviously piece together as we go on through the week. You can see oil rises as supply concerns offset weak China data. Also, you can see worries over supply stirred by conflict in the Middle East. Yesterday, 3% drop. Say oil prices rise today. They kind of have to put something to suit the narrative, but ultimately oil lower yesterday with the conflict in the Middle East. People had expected Israel to launch a full offensive into Gaza, but that is not what has materialized. It's a bit more calm, a bit more calm. Obviously, it's not good. It's not calm by any stretch of the imagination, but not as forceful as markets may have anticipated, which is a slight bit of a positive for markets as well in today's trading session. We can look across the grid. You can see stocks in Asia lower, Nikkei slightly higher, obviously in line with the Japanese yen downside, but Japanese yen hammered across the board in today's session so far. US dollar's taken a bit of a turn. It was higher across the board when I first got into the office this morning about an hour ago, but now it's taking a bit of a turn. It's pretty flat across the board as we are seeing some aggressive downside in bond yields to begin today's European sessions. Downside in bond yields causes downside in the dollar, likely to be somewhat supportive for stocks, but European stock indexes across the board higher. We do await a lot of economic data out of the Eurozone today, so I'm not going to touch or go anywhere near European equities, certainly till about 10 o'clock this morning. But US equity futures, bit of a pullback. Nasdaq's down, but Dow Jones led the move higher. Okay, 1 week percentage change, month to date percentage change, 3 month percentage change. It's been a massacre across stocks, but a bit of positivity in yesterday. Yeah, in yesterday's trading, it wouldn't surprise me at all. We do get a bit of a bounce back, but the Fed tomorrow likely to keep somewhat of a hawkish stance as we head into the Fed tomorrow. Euros higher across the board. Maybe it's a little bit difficult to kind of wrap my head around that. I mean, maybe it's to do with inflation coming down. ECB will stop. I mean, I don't really know, to be honest with you. I mean, GDP actual minus 0.1 versus the consensus 0.3, minus 0.7, and consensus is minus 0.3. So growth a bit better than anticipated in Germany. Inflation coming down in Germany more than anticipated, which is a bit of a positive for the Eurozone. But growth is still negative. That is still negative growth in a quarter, which, it's better than consensus, but ultimately it is still negative growth throughout the Eurozone. Economic data out of China this morning, as we alluded to earlier on, negative. Manufacturing PMI, which obviously the manufacturing sector is a large component of the Chinese economy, that being below 50 is negative in itself. Also missing on consensus is a further negative for the Chinese economy. There is not much positives over the last number of months. Non-manufacturing PMI again slightly above 50, so maybe a bit of a point on the board from that, but ultimately below consensus and not the best of figures out of China. We spoke about the Bank of Japan this morning. You see GDP out of France in line with expectations. Still avoids contraction, which I suppose is a bit of a positive, but 0.1% growth isn't exactly strong growth within the French economy. Inflation we just had out a few minutes ago. Clock's messed up, sorry, gotta change that. Inflation just had out a few minutes ago, 7.45, 4% in line with consensus, below previous. So again, inflation coming down, 0.1% growth in the month of October, but slightly below consensus. So making progress on inflation in Germany and in France. We await Eurozone inflation at 10 o'clock this morning. GDP figures in Italy to come in about an hour's time, so we'll keep an eye on that. A little bit later on, not too much in the way of economic data this afternoon. We will wait and see what has to happen, or wait and see what happens tomorrow with some manufacturing PMI, job openings, ADP employment, and obviously the Fed tomorrow at 6 o'clock. All of this is shifted an hour early. Keep that in mind this week. Did mention that yesterday. US cash open at 1:30, Fed at 6, economic data at 2, non-farm payrolls on Friday will be at 12:30 due to the clocks going backwards in the UK. Equity markets across the board, you can see the Dow Jones aggressively pushing higher yesterday. S&P did finish yesterday higher. The Nasdaq finished yesterday slightly higher as well. Russell not enjoying as good a time of it, did sell off relatively aggressively just after the open, Russell, but has not managed to extend moves to the downside. But Nasdaq a bit sideways. If you want to get long stocks, looks like the Dow Jones is the one to play. Maybe a bit of S&P, but it's probably likely to be somewhat range bound as we head towards the Fed tomorrow. You can see the DAX, the Euro stocks, the FTSE just chopping sideways, not doing too much for us. We had a bit of upside to begin the session yesterday, but as soon as the cash market opened, a bit of upside in the Asian session yesterday, as soon as the cash market opened throughout Europe, really we saw not much movement whatsoever across the DAX, the Euro stocks, or the FTSE. So stocks upside due to the fact that earnings were relatively positive. That is likely to keep for the Fed to keep the foot on the gas, but ultimately not bad for business conditions. You can see a bit of downside in the dollar post Asian session. In the Asian session, you had a bit of upside in the dollar. Now we're moving back towards the downside. You can see your Aussie, Kiwi, Euro all printing higher lows and higher highs on this hourly chart. Cable technically with the higher lows and higher highs as well, still pushing higher, although it is against recent moves, as you can see, but relatively sideways, certainly across cable, but across much of the dollar. Recently, apart from dollar Swiss, dollar CAD, they rallied last week, but they've just chopped sideways to begin this week. Dollar yen, though, accelerates moves to the upside. Now, that is a Japanese yen move, but I think it's interesting. Yeah, it's back above 150. Looks like it wants to make a test of this 150, 150.70. Are markets looking to test the Bank of Japan's resolve in relation to intervention? We are now back above 150, and as long as we remain above 150, that becomes, or that is something we need to think about. But downside in yields, you'd expect that to cause downside in dollar yen. Ultimately, that's not what we're seeing, but this big downside candle in the 10-year yield, not really resulting in much movement in either direction. That's sparked a little bit of a sell-off in the dollar, but I'm not going to read too much into that just as of yet. Markets, not a lot of clear direction, lacking clear direction today. The Dow Jones this week, only one with clear direction, but ultimately markets a little bit sideways, completely expected once you take into consideration we've got the Fed tomorrow, non-farm payrolls on Friday, strong week of economic data in the US. But where you look for trading opportunities, maybe probably more intraday opportunities rather than to hold for a few days. Slightly tricky trading conditions in this morning. We have to dive into the market, do a bit more of analysis. But gold, oil, oil downside. It's got lower highs and lower lows. The trend is lower on the hourly chart. A slightly intraday position. You're at a little resistance level here, up with around number of 84. That's kind of the only thing I'm looking at the moment that would make sense for an intraday position. But again, do I say that with much confidence? No, not really. We'll give it a bit of time, play out over the European session, see what happens before we open up for US trade at a slightly earlier time of 1:30 today.